company financial statements, and now in this module we will be practicing the statement of financial position and the statement of changes in equity. So let's see how to work it out. And the thing is that the practice question remains same, in which we have, by the way, these are again the information in which we have rupees in thousand. All right, very well. And this is also rupees in thousand. Okay, very well. Okay, so we have share capital with us, share premium and revaluation reserve. All these three are our owner's equity items. Then retained earnings with us. Okay, we have already seen this trial balance in the previous module. So let's directly discuss that how its statement of financial position will look. But before that, we have to work out statement of changes in equity. Okay, so statement of changes in equity, we know very well that we have to have these columns with us. Okay, statement of changes in equity covers all the accounting heads. Those belong to the owner's equity: share capital, share premium, revaluation reserve, accumulated OCI, and retained profits. Okay, so we have this amount appearing in our balance sheet and also this amount appearing in our balance sheet in our trial balance. So you see, this is the amount of share capital and share premium. So this comes over here. And then revaluation reserve, altogether the revaluation was done during the year. So there is zero opening balance. It is not available in the trial balance as well. And other comprehensive income, we don't have any other comprehensive income in this question. Then comes opening balance of retained earnings or retained profit. Yes, this is over here, retained earning 563. Just see, it is appearing as opening balance. So total is here in the total column. Then no fresh issue of share capital, 0. Revaluation of assets, it took place during the year. So coming in this under revaluation reserve. And this is the amount of retained profits that we have earned during the year. So this total column is representing the final figures. And ultimately we have the total amount of owner's equity. You can see this total amount of owner's equity in this balance sheet as well, which is 1495. So all these are the balances which are the closing balances appearing in the statement of changes in equity. You can see like 550, 100, 125 and 720. 550, 100, 125 and 720. Okay, and the total is 1495. Yes, the total is 1495. All right. So this is what, like a statement of changes in equity, we prepare in this way. All right. Next comes statement of financial position, which is also known as balance sheet, and all these are rupees in thousand, we know very well. Okay, all these are rupees in thousand. All right. So non-current assets are land and building and plant and machinery, which were appearing in the trial balance. Okay, that's it, 678 and 585. And then comes current assets, inventory, receivables and cash at bank. And then comes current liabilities. So what we do, we subtract current liabilities from the current assets. Okay, and this gives us working capital figure. This working capital is added with the non-current assets so that our owner's equity, which was in fact the same 1495 as we had already worked out, is equal to our total assets over here. Why owner's equity? Because we don't have non-current liabilities in this scenario. Otherwise, it is in fact the capital employed figure, that is always owner's equity plus non-current liabilities. So owner's equity and non-current liabilities is capital employed, and that is also equal to the capital employed, which is non-current assets and working capital, as we discussed over here. All right. So this is all about our practice for the company financial statements, and the important tips that we have to remember in this module include, in fact, the movement in revaluation reserve. Okay, that should be presented separately. This is something important, because sometimes what happens that we confuse that it is also an item of other comprehensive income. Why not it is included in that? The thing is that standard asks us that the revaluation reserves movement should be shown separately. It should not be clubbed in other comprehensive incomes. So that's why while preparing statement of changes in equity, the revaluation reserve is presented separately from the other accumulated comprehensive incomes. All right. So very important tip. Thank you very much.